Congress has created the option to roll over up to $100,000 directly from an IRA to a qualified charity. This is an exciting opportunity. There are at least 5 different categories of donors who will be very interested in this IRA giving option. The IRA Charitable Rollover is available for individuals that are 70 and a half or older. It is a direct transfer to a public charity. Previously, some individuals would take a withdrawal from their IRA, report the distribution as taxable income, make a cash gift to charity, obtain the required receipts for charitable gifts over $250, and then they would take their deduction. Not only was this process rather cumbersome, it also resulted in an increased adjusted gross income on their tax filing. Now, the IRA rollover is very, very simple. The transfer is made directly from the IRA to the qualified public charity. The IRA rollover is not taxable on the donor's tax return, and there's no need for a tax deduction. It's a nice, simple, effective way of making a charitable. Let's talk about Mary Smith for a moment. She is a retired teacher. She recently turned 71. She volunteers for us regularly, and each year she faithfully makes a gift of $2,000. Think about what she has to do to go through making that gift. Well, first of all, she withdraws $2,000 from her IRA. Then, after withdrawing the $2,000 from her IRA, she has to report that amount in her taxable income. Then she writes a check to us, and then because the gift is over $250, we then issue her a receipt, and she deducts $2,000 on her tax return. Mary had heard, however, about the new IRA rollover option. She spoke with our office and asked if this would be something that would be viable for her to use to make her annual gift. We told her absolutely. We are a public charity and we qualify for the IRA rollover gift. She simply would need to contact her IRA custodian and have the gift transferred directly to us. So she did. She contacted her financial company that managed her IRA and was then directed to the distribution form. She asked the financial company to make what is called a qualified charitable distribution to the Salvation Army. The amount she chose to give was $2,000. The financial company transferred the $2,000 directly to us. The balance of a required minimum distribution was then distributed to Mary, and she reported the IRA distribution on her tax return. But the $2,000 that came to the charity, she did not have to report. She loved the simplicity of the IRA charitable rollover. The $2,000 wasn't reported on her income tax form. She did not have to itemize to take her deduction. And the simplicity, the convenience of the gift, it was just a wonderful benefit to Mary. She loved the simplicity of the IRA gift. She's in hopes that Congress will continue to allow this each and every year. The simplicity, the convenience of this gift, it just worked out perfectly for Mary. Now let's talk about one generous donor. We'll call him Bruce. Bruce retired several years ago, but he wanted to be active during his retirement years, so he started volunteering with the Salvation Army. He devotes several hours a week to his volunteer work and receives great satisfaction by helping others. Since Bruce lives fairly moderately and has a good income from his retirement plan and investments, he is a very generous donor. In fact, he gives 50% of his adjusted gross income, and he feels it's an opportunity to give back to society for the very good life he's been able to lead, but he would like to do more. Bruce is very pleased with his gift. There was nothing included in his taxable income, and he was able to deduct all his regular gifts. In addition, he enjoyed making the extra gift with a $20,000 IRA charitable rollover. The charity Bruce loves, obviously, is the Salvation Army. We had a special project going, and he wanted to make an additional gift. And the additional gift was $20,000. He checked with his CPA, and the CPA said that it made sense. And so Bruce was able to give that $20,000 to the project. His CPA explained to him that the tax-free IRA rollover is permitted in 2013, but unless Congress acts, it will not be available next year. So he contacted his IRA custodian and had them make a gift of $20,000 to the Salvation Army. In the words of Bruce, I'm very pleased with my IRA gift because it was not in my income. I'm able to deduct my regular gift and still help with an added gift of $20,000. Let's talk about the non-itemizer donor. Judy was a retired nurse. She volunteered with the Salvation Army as well as a few other charities. During her working years, she never enjoyed a large salary, but with good investments, tax-free growth, Judy's retirement plan, to her surprise, had grown to over $435,000. She's now 78. She owns her own home and says that she has more income than she needs. Each year, she makes a $1,000 gift to the Salvation Army. Now, because she does not have a home mortgage, she doesn't have enough other deductions to itemize, Judy just goes ahead and she takes the standard deduction. She heard about the IRA Charitable Rollover and thought that that might be a good option. She had inquired of our office and wanted to know if this was a gift that made sense for her. After talking with her, we saw that she was indeed withdrawing the $1,000 from her IRA. Because she gives $1,000 and takes the standard deduction, Judy is not going to be reducing her income taxes with her gift, but rather she's increased income of $1,000 from her IRA, but no added charitable deduction. A better plan for her would to be the gift made directly from her IRA. This would reduce her income by $1,000, and it's also going to save taxes. She was pleased to learn that she could roll over the $1,000 from her IRA to us, and best of all, she was able to make the gift reduce her current taxes. Judy said that she had spoke with her best friend and encouraged her to make a similar gift. She knew that their situation was very similar. Her words were, IRA Charitable Rollover was a great plan. I helped those in need through my favorite charity, and I also was able to lower my taxes. Thanks so much, Judy. Let's talk about another individual. Sam is a retired manufacturing worker with a substantial IRA. He has some retirement income from CDs and dividends from stocks. With his regular retirement income, his Social Security payments are taxable at 50%. However, Sam also has a large IRA. At age 78, the federal rules require a larger taxable IRA distribution each year. With Sam's required distribution from his IRA increasing his taxable income, he knew that up to 85% of his Social Security payments would soon be taxable. So Sam spoke with our office and discovered that there now is the option for making a gift directly from his IRA. After learning about this option, he was pretty excited about it, and he talked to his tax advisor, explained the advantages of this plan. Since the IRA rollover requires for part or all of the required minimum distribution, Sam could give part of his required IRA payout to us by transferring a portion of his required distribution to us. He's able to maintain a lower taxable income. And with a lower income level, 50% rather than 85% of Sam's Social Security payments may be taxed. In Sam's word, the IRA rollover is excellent. I helped those in need and also lowered taxes on my Social Security payments. Claire is a very, very youthful 78-year-old woman. She is a retired investment advisor. She watched her IRA blossom and grow through good investments, and it's now the largest asset in her estate. Based on her age of 78 and the increased value, her required distribution just this year alone is nearly $100,000. She's a frequent volunteer. She would like to make a major gift to a project that we have. And in November, she did not actually need the distribution for this year. With the growth of her IRA, it was logical to make the gift from her IRA. But how can this work? We have to ask ourselves, is this good tax planning strategy? She contacted her CPA, and she wanted to discuss the best way to make her gift. And her CPA explained to her the benefits of making a tax-free IRA charitable rollover by not taking the $100,000 into her income. Claire could benefit in three ways. First, her personal exemption would not be phased out at the higher income level. Second, she would not lose the 2% of her itemized deductions at that level. And third, her AMT exemption would not be phased out at the higher income level. The first step in making an IRA distribution is contact your IRA custodian. Most IRA custodians have a standard IRA distribution form. It's likely that the IRA custodians will add the IRA Charitable Rollover as an option to this form if they've not done so already. The IRA owner will need to sign the application, indicate the amount of the gift, and then obviously contact our office, and then the check is sent directly to the charity indeed. If there are specific purposes that the donor would like the gift to be used for, again, our office should be contacted and we can assist with that. The IRA Charitable Rollover may be extended into future years. We do not know. It does expire in 2013. But for many persons, a decision must be made fairly quickly. In order to make the transfer, the donor is going to need to contact his IRA custodian, and they are often maintained by large financial service companies, banks, or trust companies. The IRA custodian then makes the distribution direct to the charity. It is important, however, that this happen before December 31st. We appreciate you taking a few moments to listen to this presentation. If we can be of assistance, please contact our office at 1-866-364-6446. That's 1-866-364-6446. Thank you.